You scooped up an asset for pennies, literal pennies on the dollar, an asset that very recently was valued with a market cap of around $1 billion, received about 350 million in investment. And you scooped this thing up on the ridiculous cheap. For anyone who's looked at this asset in the past when Pure Gold had it, and they saw the outcome, now you've got it. I think you scooped it up in what we may be calling one day the deal of the decade, to be honest with you, just given what you paid for what is there. But what's different this time? Welcome to the Jay Martin Show. If you're new to the show, my name is Jay. I'm an investor. I'm here looking for the smartest home for my cash. Now, today we're talking gold. It's early December. The gold price is rallying. But for the last 18, 24 months, it's been a super tough market. And during those super tough markets, that is when the best deals get done. Whether you're a retail investor just building a position in a highly undervalued gold equity, or you're a company executive looking to scoop up distressed assets on the cheap. Those two things happen during bear markets and investors get paid during the good years. So my guest today is Shane Williams. He's the CEO of West Red Lake Gold Mines, an entrepreneur who's put his money where his mouth is, and he's been in hunting mode over the last 12 months and scooped up an asset which maybe we'll reflect back on as the deal of the decade. We'll find out. So anyways, here is Shane Williams. Enjoy this one. All right, here I am with Shane Williams. Shane, it's great to see you. Thanks so much for coming on the show.
Thank you, Jay. I love the show, so great to be on.
We were just chatting before I hit record. You said you were in Beaver Creek in September. We were sort of going back and forth about how responsive gold investors are and how sentiment can shift so quickly. And we're experiencing a pretty bullish rally in the gold price right now. And on the heels of that, Twitter sentiment's exploding, as it always does. And you were reflecting, wasn't that long ago in Beaver Creek, it was like doom and gloom and people were banging their head against a wall. So what's your take right now, Shane, gold sentiment? What are you watching?
Yeah, as I said to you before, I was at Beaver Creek and the Denver Gold Show, and it was pretty subdued. Investors, I believe there was a post all over Twitter of empty rooms, and the one-to-one was pretty dull, and it was very doom and gloom, to be honest. But yeah, in the last few months, it's not been that long ago, gold has taken a bit of a rise and it's beginning to do what it's supposed to do, given the uncertainty in the world, the macro overview. Everyone has talked about that. It's taken a bit of time, but it's beginning to show that. And sentiment now is changing. We get a lot of inbounds now of everybody wants to speak to us. Everyone wants to speak about the gold investors. It's just changed. It's been overnight. Gold investors tend to be that. They are doom and gloom, and then they go from other extremes, very positive. So yeah. The macro has taken some time to get over. As you said, there's a lot going on in the world. There's a couple of wars going on, the government debt, the inflation, etc. People have been talking about this for quite a while, but I believe now it's beginning to turn a little bit, and we're seeing a good support. We're seeing a bit of inflows into the EFTs, etc. So yeah, now is a good time, I think, for investors to start piling into gold.
It never surprises me how the macro case for, a gold market, but frankly, most commodity markets, if you think through how they rally independent from each other, like within a secular commodities market, copper will have a run, then it'll pull back, and then maybe gold will run and pull back, and then, grains and cattle futures, et cetera. But, it's not synchronized. But it never surprises me how the macro case for gold specifically will build and build and build, sometimes for years, as we've seen. And then when the gold price and then the equities catch up, it's like a whipsaw event, and it happens so fast. And we saw this in 2020. It was such a hot market. I remember, every gold investor was celebrating, and I had a few, like Rick Rule on my show, and I asked him, does this not concern you, though, how hot it got so fast? And equity prices were just going crazy, and tons of money was made very, very quickly, very, very quickly. It's amazing how fast it can pivot, isn't it?
Well, and look, the price of gold today, there's a lot of senior producers, and they're making quite a bit of money. AISCs are around $1,200, and $2,000 gold. There's good margins there, better than they've had for a long time. It just hasn't translated down the next level, to the juniors and the intermediates. And as you said, it won't take much for that whipsaw effect before they start to pick up and they see the inflows to the next level. It always takes some time, in my experience. First, it gets to the majors, the big EFTs, but once that money starts to fly in, it moves down the level. Intermediates and then the juniors basically start to move very quickly.
So during those rough periods where everybody hates the market, that's the time when you want to be busy. That's the time when investors should be moving in and building positions, when equities are super cheap. And that's the time when company executives should be aggressive as well. And you were, right? And you scooped up an asset for pennies, literal pennies on the dollar, an asset that very recently was valued with a market cap of around $1 billion, received about 350 million in investment. And you scooped this thing up on the ridiculous cheap. So I want you to walk me through that acquisition. Walk me through West Red Lake Gold Mines right now for anybody who's brand new to the story, Shane.
Yeah, I think it's good to give a little bit of context. Most people will know Frank Justra and his track record of building companies. And so, look, about a year ago, a group of us got together with Frank. And, Frank is a macro guy, big macro guy. He always seems to get timing very right, Jay. The last good time he built Wheaton River, became Gold Corp. And, the rest is history of what he's done. He's done that a number of times. And he sees the same setup for gold that he saw back then. You know what I mean? He saw the macro overview. He saw the opportunity. And one of the best leverages to that is to build a gold company during the uptick in gold. You get extra leverage. Gold guys love the leverage. So with the junior miners and building a company, you get leverage. So the concept was to build another mid-tier producer in Canada, gold producer. So then we started to look around at an asset. And again, we like to get assets that are cheap, pennies on the dollar, get in, bring in the team, turn it around. So that's how we kind of focused on. And the Red Lake region in particular has been, Great Bear was there. Everybody loved Great Bear. It had a great run the last number of years. Obviously, Kinross getting in there. Gold Corp was originally in that region. Now it's Evolution. So there's no real developer of choice in that region. If you want to play Red Lake, there's nowhere really to go. There's a lot of small juniors, but there's nobody as a developer. As you probably know in your investors, everybody's in the Golden Triangle. It's the place to be. There's loads of companies. But Red Lake has been kind of ignored a little bit. So we saw that as an opportunity, given the macro context, to get in there, find an asset. We looked around, and at that stage, Pure Gold had just gone through their CCAA, and we put a team together, and a technical team, and went under the covers, tried to understand the issues, what went wrong. We saw that opportunity, and look, with Frank's backing and the team, and we were able to secure an asset for, as you said, pennies on the dollar. And I think we play to the gold investor, but also to the value investor. A lot of people play to the gold and the gold upside, but as a value investor, you're getting, as you say, pennies on the dollar for this company. So that's kind of the strategy as well, a little bit of how we got into it, Jay, a little bit.
So I gotta pull on some threads there, Shane, because I'm quite familiar with the Pure Gold story. You purchased the Madsen mine. So back in 2020, this was the next great Canadian gold story, right? That's how this was presented to the market. Pure Gold made a lot of people a lot of money that year and the consecutive year, and then everything went south. And so I got to ask you, here's how I see it, right? There's geology beneath the surface, and then there's humans above the surface. And one of those things can mess the other thing up. And that's, essentially what happened here. The geology hasn't changed on this project. So I got to ask, though, what's different this time for anyone who's looked at this asset in the past when Pure Gold had it and they saw the outcome? Now you've got it. I think you scooped it up in what we may be calling one day the deal of the decade, to be honest with you, just given what you paid for what is there. But what's different this time? Talk to me about that.
Yeah, look, I think it was, as you say, a lot of people made a lot of money, but it was the most hated asset at one stage in Canada. A lot of people came in late, lost a lot of money. Most times I talk to investors, again, the same question. We lost money. We were big shareholders. They all came in a little bit late. So I think, look, as you said, people and geology are the main things in building this thing. When we went in with a team, we brought in a technical team. We went to the site. We really got under the covers and really understood what was wrong. And we saw very clearly, Jay, the difference between the asset itself and the management approach to building out that asset. that everybody, it all got tarnished in the same brush, unfortunately. And so, we saw that difference between the team and their approach to building this mine and also the asset itself. And they never really got in underground. I can get into all sorts of reasons why, but one of the issues is the company was set up as more a promotion, as a promoter. It was the Oxygen Group, who some of you are familiar with. They never really built a mine. They're more junior explorers and exploration guys, and they never really built a mine. And their strategy was to sell this mine. That's clear from our understanding. Everything was leased, to give you an example. Everything was leased. No capital was put into the project. Everything was pushed into OPEX. Everything was pushed through. So they were hoping, and they took on some debt. They took on a very covenant-heavy debt package. Sprott put in $150 million, and the covenants were they had to be in production by a certain date. So that drove a lot of their decisions of moving forward quickly, leasing everything. Let's get into production. Hopefully, then we get into production, somebody will come in and buy the mine. So that's kind of the context of what they did. And so that kind of forced them into certain decisions. They went, these systems in Red Lake, some of your viewers might be familiar, they're very deep, they're high grade, deeper you get, and they're also very veiny and sort of a vein systems. They need a lot of underground drilling. They need a lot of drilling. That's the main technical challenge. And unfortunately, that wasn't done enough level of drilling for these systems. To give you an example, 10, 15 millimeter spacing of drilling. These systems need 5 to 7 meters of drilling. Very, very tight drilling, underground drilling. And the team, they could drill it from surface. They hadn't got the development done underground. They couldn't do the level of definition needed. And they attacked an area of the ore body called the McVeigh zone, which is closer. It's probably, you can see it on our presentation. It's closer to surface. It was easy to get into production. It was closer. But unfortunately, it's the lower grade material. So a lot of those we saw when we went in, and we kind of said, okay, look, with the right team, the right approach, no debt, some equity, we can spend the time and effort to do this and turn it around. That's kind of the high level, Jay, around how we can do it differently. The geology, you're right, the geology hasn't changed. It's exactly the same, but the approach to that geology is something that we can bring differently to these underground systems. And, we've brought in some key people, which we'll touch on, but they know these systems well. Some of these guys who've built big companies in the Abitibi in this region, they know these systems well and are able to give some guidance and advice. So this needs to be drilled really to death, really, Jay. That needs to be drilled. A lot more drilling underground. It was not done. To give you an example, when we went in, there's $5 million of critical spares in the mill. Right? $5 million would have done a lot of drilling underground. So, they got the capital, they got access to capital, but that allocation of capital, they raised a lot of money and that allocation. So there was a litany of reasons we saw, and they're all on our presentation that we kind of highlighted. And once we saw that, we saw the opportunity really, because as you say, there has been a lot of money spent on this asset, and we saw the opportunity to get in,
It's so, the details matter so much. I remember back when this story was being promoted through 2020 and the narrative coming out was, we're on plan, we're on budget, we'll be pouring gold by the end of the year. We'll have gold bars by the end of the year. And that was the headline consistently, right? Yeah. And what you just kind of walked us through is like, yeah, that was the game plan because of the covenants of their debt facility. Yeah. They had to expedite certain decisions that they otherwise wouldn't have. And maybe pouring gold by the end of 2020 wasn't in their best interest, but as a consequence of the debt deal they did, that's what they had to do, right? Not in their best interest to attack the low grade.
It set them up for a pro. And also look at the time as well, to give you a bit of the context. Look, Evolution had just bought Goldcorp, their Red Lake mine, Great Bear was going. There was a lot of kind of M&A going on at the time. And I suspect a lot of that was, there was some advisors who, Sprott even wanted them to slow down, take their time, do it right. But I think with the sentiment in the market, the ability to get into production, the M&A potential, there was suitors looking around and they just pushed on. And, that's one thing that we saw when we went up there and talked to the team. and the team pressure of the team to perform and push it to production, it's very clearly from anyone that it was a bit crazy on the ground on what they were trying to do and quickly. And they lost control of the ore body. The ore body, they lost control of it. They didn't understand the geological controls. And a lot of those issues are fixable with time and effort. And that's what we saw very clearly. That's what we saw clearly from that.
Yeah. Okay. So look, I mean, that's the past. You have the asset now. I want to talk about the future. Worth mentioning just the deal terms, just to put that in context, because I've come out here and said, like, I think this could be the deal of the decade. So walk me through what the numbers are, Shane, just so my audience has context.
Look, we basically gave, $6.5 million in cash, right? So $6.5 million in cash. We gave 40 million shares. At the time, it was 35 cents. And we gave a 1% NSR, basically. And Sprott were the main lender. So they were the senior secured lenders. So when it went under, they had started a bit of a process to try and see who was interested. There was other companies that was interested. For sure, there was 5 or 6 companies who actually looked at the asset. We were part of that. But what secured it for us really was a lot of companies wanted to give more cash. And, we gave an equity-rich deal to Sprott, and they saw the potential of the upside. Obviously, with Frank's backing, the team we had, the ability to grow this into a major mining company, they saw the upside, the equity upside. And look, if it was a normal junior, potentially, they wouldn't have seen that. But obviously, with Frank's backing and what he's done before and the history, that's what kind of secured it with the equity. We converted all their debt, no debt outstanding, into equity in West Red Lake. And they own about 24% of West Red Lake now. They converted all their debt into about 24% of West Red Lake. And I would argue, look, they went in at 35 cents. We're now trading around 70 cents. So they've made some of their money back. They've made probably 30% of their money back when you're on a deal term sort of area. So they're happy shareholders. They're in for the long term. They're there for the long term. They want, they have 150 million put into this project. We have to go a long, long way for them to get some money back. That's kind of the deal structure, how we built it.
But it's a good vote of confidence, because if you put yourself in Sprott's shoes in that moment, their goal is to recoup losses. And so they're going to bet. They're going to bet on the operator. They had a number of suitors come in, look at the deal. We go this way, that way, cash over here, shares over here. But at the end of the day, they need a long-term operator. They need somebody who can execute, as you said, drill this thing to death, de-risk it, and then restart the planning, the mine planning. Okay.
And also potentially, given what backers we have or whatever, grow into something much bigger, be part of the bigger story. I mean, Frank is very ambitious what he wants to do. And, Madsen won't be the project we go with. Madsen will get into production, but we'll use that to grow into a mid-tier producer. And that was the deal that convinced Sprott that, we want to be long-term shareholders here. We see the upside down the road, And, between Frank has about 10%, Sprott have about 24%. And we brought in some other good institutions. Van Eck is in there for 7%, some other institutions. We're an institutional product. Very early, we're an institutional product, and they all came in for that growth story. That's a good vote of confidence effectively in the company and the plan.
It's a good vote of confidence. Over 40% of the shares held by Sprott, Frank Giustra, Van Eck. So you mentioned, the goal here, shortish term, get Madsen back to production, and then grow West Red Lake gold mines into a mid-tier producer, probably a few more acquisitions, exploration optionality, et cetera, et cetera. So what can prospective shareholders expect from you, Shane, in terms of news flow over the next, say, 6 months?
Yeah, look, just to step back a little bit on the context of the restart. Look, we're going to take our time. We don't have any debt. We're going to spend the next 12 to 15 months, actually, Jay, getting underground, drilling this deposit. It needs a lot more drilling. It needs upwards of 40 to 50,000 meters of drilling, underground development, really de-risking that. The other thing, the project never had reserves on it. They went forward without defining reserves and getting that definition. So we're stepping back. We do a number of studies. We put reserves on the book. And I really want to have like 1 year of inventory designed in stopes ready to go before we even think about starting, from that de-risking point of view, because the market is exactly what you said, Jay. What are you going to do different, guys? How can I know that? And I really want to be sure that we've de-risked this. When we tell everyone we're starting, we're very, very confident that when we start, we're going to really achieve what we set out to do. Yeah.
Okay. I appreciate that. I appreciate that.
And the other one, a little bit, we also have another property called the Rowan property on the other side of the lake. And this has like 800,000 ounces already at 9 grams. So a little bit of different, our concept and strategy is to build this hub and spoke model in Red Lake. The team had only Madsen and they lived and died by Madsen. Where we have Rowan and we have Madsen, and our concept is more have a number of these deposits. We have the only mill in the region now. We have the only mill in the region. And we have Madsen as our base. But we have another property on the other side of the lake where it's high grade. We can move material from there into the Madsen mill. And there's a lot of other smaller deposits around Red Lake, very high grade, but not big enough to support a full project. And we see a consolidation play around Red Lake and have a number of deposits to feed, again, on this de-risking strategy, to have a number of deposits feed into the Madsen mill and grow Madsen. The mill can be expanded and you can build a good platform of growth even within the Red Lake region, high-grade region,
Mm-hmm. And Rowan is just subtly northeast of the Madsen project.
Yeah, it's on the other side of the lake, northeast. It's on the other side of the lake. It was a joint venture we picked up. It was the early project in West Red Lake. Obviously, that's the name, West Red Lake. It's about 80 kilometers on a road away from Madsen. But in the winter, there's a trucking option across the winter roads they have. So, it's very doable from a trucking perspective to bring that ore in. And it's higher grade than Madsen. And so a sweetener, as you say, into Madsen, which will help with the production and the de-risking. Back to this de-risking strategy, I think, Jay. I think that's very important. One of our mottos going forward. We need to convince investors that, as you said, hey, what's different? What are we doing different? I think our approach is different and our strategy of that consolidation is different. So we have a couple of deposits feeding into Madsen.
Yeah. And the aggressive drilling. I mean, that's the best answer, I suppose, is you're telling me it's different this time. And you're saying, well, just let us prove it, right? 12, 15.
Yeah. And the mill, look, the above surface facilities, the mill itself, it's on our website. You'll see it. It's brand new. It had 80%, 90% recovery, a lot of gravity out of that, 40%. So the mill wasn't the issue. The milling and metallurgy is not the issue. It was predominantly on the underground, the drilling, the spacing, the development. And that's really where we're focused on. That's where our next 12 to 15 months of drilling will be. And so as we do that, as you say, investors will see a steady stream of drilling results. So as well as de-risking, we will also grow the deposit. So we'll have this de-risking strategy ongoing, but I want to do a bit of around the edges, some of this to show people the potential of the growth across the deposit. We've had some recent results out in the last 3 or 4 weeks, some very high grade results outside the existing resource, which shows the potential to grow the resource itself. So it's kind of a two-pronged approach.
Okay.
Yeah.
Okay. Thank you, Shane. Now, will you be going back to the market for cash in the near future for these drilling programs?
We recently just raised $15 million in a raise recently. We do need more money to get it all back into production. We need somewhere between $50 to $70 million of production to raise that much money. We've just raised 15. We will need at some stage, but we are looking at alternatives. We are looking at alternatives at this stage. The idea is to minimize the dilution. When you look at it from a project perspective, $75 million, to get into production is not a lot from a brownfield sort of point of view. All permits are in place, everything is there. So once we've done this de-risking, we're really ready to go. and there is alternative strategies to look at as we go forward. So we will be minimizing dilution and minimizing equity raises, but we just did a recent raise to keep us going. At this stage, we're still looking at strategies going forward.
Okay.
I do want to just touch on the team actually a little bit.
Let's
Jay,
do it. Yeah, well, I was going to say, because slide 5 in your corporate deck is a haymaker. That's your advisors, your directors, and your executives. So yeah, please, let's
again, on this de-risking strategy, we wanted to show the market the technical team we had in place and build on a technical capability of the team, a little bit different to the other group. And so, myself, I've been with Skeena Resources. I helped build Skeena Resources for the last 5 years, over from a small company all the way through. Before that, I was with Eldorado. So I'm an operator developer. That's my main background, so have that technical understanding of what it takes to build a project and underground. And with that, we've managed to attract some fantastic board members. The board is the who's who of Canadian mining. Tony McCooch, Bill Kirkland, Duncan, Westone Mining, Hugh Agro from Kinross. And all of these guys came in and did their own DD. It wasn't as if they're just coming on a board. Given the history of the company and the CCAA, they're not going to risk their reputations on a project that they don't believe in. So they all came in, they did their own DD. They looked under the cover. They looked at the project. They looked at our plans. They came on board. They were some of them were involved in the DD. Tony was on board. Tony knows this asset well. He was actually an early advisor to Pure Gold. He knows the asset well. He's been on site. He didn't agree with their approach. He's more in line with our approach. He stepped off away from them. So they know this asset well. Duncan knows the activity. He knows these systems very well. So, when we pitched our approach and said, come on board, and Frank in the long term, they were all on board. They all came under, and another tick for the company,
100%. Yeah. And it extends, by the way, through your directors. You mentioned Tony McCooch, a handful of others, your advisors as well, very connected in the sector. We talked a lot about Frank Juster, but there's a handful of names in there that have just been in the business for a very long time and highly, highly respected, if not necessarily retail investor famous, right? You dig into the resumes of these individuals, and it's an absolute rock star lineup of folks.
I think it's important that you understand the group we're in. We're in a group called the Fiore Group, really, which is the wider Frank sort of group. And you interviewed Sean there recently, and Sean, we're in the same office with Oliver and Silver, so there's a lot of resources. I'm new to this marketing thing, Jay. As you say, I'm a mine builder, and, getting advice from Sean, and he's good at the marketing, who to use, who to reach out to. It's kind of like it's a great breath of fresh air to have that huge team around you. So with West Red Lake, you're not just getting, West Red Lake, you're getting the access to the advisors, the team, which is in this game we're in, it's worth a huge amount of money. You bet on the people, as you well know, in this game. So
yeah, and in a pinch, you mentioned access to resources in the team, and sometimes the most important resource all the time is cash, right? And, as a part of the Fiore Group, you've got amazing capital connections, and, able to raise 15 million recently in what's been a otherwise really terrible gold market. A lot of companies can't raise right now.
And we've raised since June, the deal closed in June, we've raised north of nearly $50 million.
That's right.
We raised 25 for the deal. We raised another 7 in flow through them. We just raised another 15, and that's the capabilities of the company, the backers. There's a lot of juniors out there would love to have raised that much money in that short period of time in markets that I would say are the worst in 10 or 15 years. So, again, the backing of Frank and his connections and what can do, people are attracted to the story and want to be part of it. So that's part of it. Another tick to the story, really, as well.
I like it. Look, Shane, I want to have you back on a few months down the road, check in on the de-risking process, progress made, et cetera, maybe early in the new year. But thank you for coming on today. I appreciate your time.
No problem. Thank you. I look forward to it, Jay. Thank you very much. Thank you.